Good morning, Wall Street winners. It is Thursday, April the 18th. And if we look at what our futures are doing in the Bloomberg app, like the other days this week, we appear to be starting out in the green. But what we have seen happening this week is that we have seen the green quickly shift to red throughout the remainder of the day. So if we go back over to our overview and look at what happened yesterday, we started off in the green here on the left side of the top charts with the Dow Jones, S&P 500, and NASDAQ, but then started to trickle down and just continued trickling down until about midway through the session or midway through the day. And then it started to recover a little bit. It came back into the green in almost all cases except the NASDAQ. But then it peaked around 2 o'clock, I think, somewhere in that afternoon range. And then it started to come down again. So we started off strong, but then things tailored off, and there's no good reason for why that happened. I mean, there's a lot of different things that could be discussed, but it was just a day where there were more people interested in selling and than there probably were in buying, and they weren't driving up prices. So it lost a little momentum. On that front, though, what we are seeing, if we flip over to the Yahoo app, is in addition to just the indexes here and how they finished yesterday, you can see that crude oil is off 50 cents. So it looks like the oil stocks may end up in the red a little bit today and continue their declines. But the VIX, the 30-day volatility index, or the index, the volatility index that looks ahead 30 days, is starting to come down a little bit. It peaked as high as the 18s. It was up significantly, I think 50% from where it was about a month ago, which means that people are starting to become a little more risky. But now as we get into earnings and seeing that come down, could be a good indication that earnings, even though it's very early in the second quarter earnings cycle, there may be a feeling that earnings are going to come in line with expectations or better, and that could help with the volatility index. Because up till earnings, the conversation was all about rate cuts and when rate cuts are going to occur. And don't get me wrong, that conversation's still going on. But as data comes in that points to inflation remaining where it is, the likelihood of rate cuts occurring sooner rather than later and in any significant size starts to go down and diminish or get pushed out. So that's where we are today. If we look at the stocks here, you can see right now, and again, it's an hour and 10 minutes to open. It's 8:21 Eastern time. We have got some red or green on the screen for the most part in your retailers. As we dip down, HCA is showing red for whatever reason. I'm not sure what the news is behind that, but other healthcares, Cardinal is even and Humana is up a little bit. Yesterday, we saw JB Hunt fall significantly into the 168 range. It'd be interesting to see what happens to this stock today, whether it goes down a little bit further or recovers. It had some bad earnings come out in their earnings announcement, so we'll see how that translates to what happens going forward. On the flip side to that, CSX, so if we take a quick look here at CSX, which is a railway stock, it had earnings yesterday after market close, and I believe they were positive. So even though it was down for the day, it was up 2% after hours and now into the pre-market. So that kind of contradicts the narrative that all shipping and transport are having issues. Maybe this problem is isolated to just one provider, like JB Hunt in this case. So we do have CNR, which is Canadian National Railways Company, announcing in 5 days. That'll be another data point around transportation to see what's happening there. That's a pretty solid stock. If we look at the 1 year here, it's definitely since October had a good run, but over the course of a year, hasn't really done much. I mean, it's gone from about 164 up to 175 where it is right now, as high as 179, 180. But It's gained 6.73%. The one that I talked about yesterday that I think I nailed was Ed. So I said going into the day, definitely pick some Ed up if it's in the 87 range. And if you did that on the day, you would have made a tidy 1.5, almost 2% profit there as it rolled forward, maybe even more depending on when you purchased and at what price. But seeing that stock, which is a utility, down in the 87 range, unlikely to stay there. And this stock, as I mentioned yesterday, has a great deal of volatility, even though it's a utility, but it's volatile within an envelope or a range. So if you play that range and that envelope, you tend to do pretty well, just knowing when to exit so that you take your profits, which I recorded a video on earlier this week as well, and know when to buy back in. So that's one that I'd be probably looking at selling at the 90.33 range and then waiting for a dip back into the 87 range. If we go down a little bit further, you can see that some of the oil stocks are hovering around just even and others are in the red. There is a few that are positive, but it is pre-market, so all of that can change. Crude looks like it could be coming back if crude does make a turn and comes back into the positive. I do expect everything that we're hearing about, and with crude futures, we are anticipating demand growth into the summer and fall. So we'll see whether that impacts that. But I do feel that the oil stocks are in a favorable position right now, price-wise, to still achieve a bit of a gain going forward. I do think there's some room for upside movement, but I think a lot of that is going to be tied to the overall geopolitical situation of what's going on, as well as the price of crude, which is impacted by geopolitical. If we dip down into the NASDAQ and the tech stocks, I think we're going to see a continued recovery here into the morning. As you can see, most of what we have on the screen here is in the green. The big one today that's reporting is Netflix. So if we scroll down to Netflix, we've got earnings coming out after market close today. This will be one to keep an eye on. I recorded a short video yesterday talking about a prediction that if Netflix comes out with good results, it's very likely that could help to lift the market going into a big tech earnings week next week, where we hear from the big Fab 7 or Fab 4, whatever we're calling Magnificent 7, Fab 4, whatever we're calling it this week, with the exception of NVIDIA. NVIDIA dropped significantly yesterday, which was a great buying opportunity. An interesting play on NVIDIA would be a call option at 145 or 150 for May 17th. So buying the option to purchase that stock at 145 or 150 a month from now on May 17th, you probably pay in around the $43 to $45 range, depending on what those options open at today. They closed around 43 yesterday. And if this stock does make a move back up $33, you could exit that for a very tidy profit in a short amount of time. So it's all about watching that and seeing what happens today. If it does pop on open like it's set to right now at $9.47 in pre-market, I'd hold off, see if it came down or if it was continuing to trend up. If you felt like it was going to regain another $10 based on the upside and some of the volume in the stock, which you can track at in the larger chart here. So if you click on that, you can track. It's hard to see on the mobile app, but you can see this much better on the desktop version. At the bottom, you can track some of the, you can add to the chart the volumes, and you can have a look at that. So I'd be looking at that today as an option there. And then as we scroll down into banking, banking is making a nice little recovery. There are some things, an article out today on TD Bank. So a lot of concerns there. They're having their annual shareholders meeting today in Toronto. I think this stock could move positive about 1 or 2% in the next couple of days, but it has been a dog for the last couple of years. So definitely maybe not a long-term hold, but it seems to be having some reverse in direction and to the positive. And then some other other gainers. I mean, Goldman did well yesterday. Morgan Stanley's making a small comeback. I think you've still got a great opportunity with JP Morgan at 180 right now. I think there's a lot of opportunity for this to get back up to 200 in the next month or so as more earnings come out. But that's where we are today. So good luck with your trades.